Okay, guys, welcome back to my YouTube channel. And in this video, as the topic of this video implies, understanding market structure and chart pattern. It is very necessary to understand market structure and chart pattern because two of them work in line. Like if you're a new beginner, this video will be helpful for you. And if you are also an advanced trader, yes, you can still be following this video once in a while, but it will be also good for you to watch this video to the end so that you can be able to understand. As you all know, no one knows it all. Even the most professional trader in the world is still learning. So now, without wasting much of our time, first you need to know that market structure work in hands with chart pattern. We have different type of chart patterns, but the one that I've seen that I've repeatedly worked over time is what they call the M's and W pattern, and what they call the inverse head and shoulder and the head and shoulder. Those are the patterns that I have seen that has occurred in the market severally. So though I've taken my time to study those patterns, and I've been able to figure out that those are the patterns these big firms, these institution traders use to manipulate we the retail traders to take trade against the overall trend of the market. So you get my point now. So without wasting much of your time, first and foremost, there are two things you need to look out for before you'll be able to master this structure and chart pattern. First, you need to be able to identify the type of trader you are, because that will play a key major role in you understanding the time frame you are. Because the time frame you are also very, very important as a trader. If you're a swing trader, if you're a day trader, you have your own time frame. If you're a scalper, you have your own time frame. So now, as a swing trader, me personally, I'm a swing trader. So my overall time frame is monthly, weekly, and where I put my focus majorly is on daily, because a daily will give me a lot of information that I need that I will need. So I focused more on daily. So now, please don't mind. I want to use this blank this thing to give an example first. Just to give a sketch of what I'm trying to explain. And I will go over to a chart to show you live example. Why I'm going to be using GBP card, because I was trading on that particular pair when that chart pattern occurred. And when that thing did occur, I laughed and I still held on to my position until the final TP. So that is why I'm doing this video. So that is why you are just seeing this blank, this thing like this. Please, never mind, please. So back to what I was saying, and you want to be looking at as a swing trader, your big boy time frame. Once you have done your top down analysis down, you have to stop at daily. Daily is your major key point in the market. So as a day trader, you want to be looking at from your 4 hours to 1 hour to 15 minutes, taking your entry. So your big boys time frame as a day trader should be 4 hours. Because the why I'm saying 4 hours, because I as a swing trader, I may want to avoid 20, 30, 40 pips in the market as a pullback coming against my direction. Maybe we're in the uptrend, but there's a pullback. Maybe if that pullback will last about 40 or 50 or 70 pips, I may want to avoid it as a swing trader. But you, as a day trader, you want to be taking that trade because you are just capitalizing on 20, 50 pips in a day and you're out of the market. So that is why you need to understand those key factors. And once you see that pullback, once I'm looking at that pullback from the daily perspective, and you, which is a day trader, you are looking at it as a on the 4 hours as a day trader perspective. You want to be there will be a lot of change of trend on 4 hours down to come and retest maybe probably a daily zone, to come and retest that daily zone. There will be a change of trend for you to take that trade. Why possibly me that is waiting on daily may want to avoid it. You see how important those time frame is now. So the big boy time frame should be 4 hours, 1 hour, then you cannot execute for 15 minutes. Then if you're a scalper, your big boy time frame should be around 1 hour, around 15 minutes, and one minute to 5 minutes. 15 minutes, 1 minute to 5 minutes. But overall, maybe your high big boy time frame may be 1 hour. So with you understanding this thing will set a break for you. So understanding the key factor, which is the number one, which is what I call the time frame, you need to identify, are you a swing trader or are you a day trader? Let's just dive in. Let's, for example, we say this is a support zone. For example, and this is a no, I'll be doing this video on my daily perspective. You now can also digest it and break it down to your 4 hours or scalper level. So it's still the same thing. Every chart that is happening on daily is also the same thing on 4 hours and 1 hour, 1 minute, one whatever. So it's still the same thing. But I'll be doing this on the daily perspective. So now, first and foremost, let's say now we are on daily zone. This is a key zone that I've been able to get from my, let's say, for my monthly. Let's say for monthly, I've been able to establish that this is a major key zone. Then what I want to be doing is I map out my key zone. And again, this is another support resistance zone from the higher time frame that I've been able to establish from my weekly or from my monthly as a swing trader. So what I want to be doing is that I want to, let me just move this. Okay, this is a key zone. And from my daily perspective, okay, let's say the market started from here. First, you know that this chart pattern work in hand with structure. First and foremost, if you're looking at this, let's say the market is just pulling down, maybe you are shorting, you are pulling down. And you know that this here is our key zone, and you know definitely that here has been able to reverse market like 2 or 3 times. You know that your target should be here, and the market is just building like this, coming down, coming down, coming down. This is a market structure. Hmm? This is a market structure. This is a bearish market structure. As long as the market is breaking lower low, lower high, lower low, lower high. As long as the market is making lower low, lower high, it's that trend. So now we've now head over to a major support zone. So you want to be keeping your eyes on the major support zone. So what will happen on this major support zone is you want to be waiting for what I call pattern. That pattern in the sense that it can be the more, like I said, the one I use mostly is this W pattern, which is like this. This one happens most of the time. So happen most of the time. And secondly, I want to be looking like what I call the inverser head and shoulder, something like this, something like this. Okay, I'll have to bring the other one down. Okay, it's still the same thing because sometimes it is not always clean like this, but it will just show you. So it is not always clean like this. So those are the pattern you want to be looking at. For there are other ones, so you can do your research and find out other ones. So like this is the left shoulder, right shoulder, and the head. So once the principle of it state that once this here is broken and retest, you can go long. So now, since you've been able to establish this pattern, now you've known them. Now, what you want to be doing is that you want to be this particular zone here, which is the daily zone or the weekly zone, and for you now to see what we call a reversal pattern. Remember, we are in a very spot, and the market is just pulling down. Remember, for this very spot to be reversed, you need what we call a chart pattern. That is why I said market spot, understanding market spot or pattern, because it is only that pattern that can reverse markets. Without that, the market will still continue going down until that can appear on the key zone, not on the key zone, not just anywhere. I will show you why I'm specifically saying key zone because I had that encounter last year on GBP card. When I get there, I will show you on the key zone. So you have to be watching on the key zone. So once you've established and the market has gotten to here, and you see something like this that popped up on the chart. So something like this pop up on the chart. Normally the way I take my trade sometimes, once I spot this at the close of the candle here, I go long straight up. If it is happening on the key zone, some people would like to wait for retest, just to break and come back again. Maybe just break above it, come back and retest, something like that. That is where some people will be. But what I do normally is that once I've been able to see that this guy has been able to break this guy close above it, I go in with, if I want to open, let's say 0.1 a lot, then I will divide it into two. I will use 0.5 for the first time, and once for the first time entering the first leg, and once the market come back for retest, I will now enter the second one. So that is how I split it. So now, be you understanding this space now. So now, once the market has successfully given you something like this, it is another this thing information for you that the market has started a new a new trend. Then let me delete this and put in another one. Then maybe as we are going, remember the overall generally is this the market wants to come. Maybe this is another resistance zone. The market wants to come here, this particular resistance zone here. But a lot of traders are currently in the market. The market is pushing up like this, pushing up, pushing up, pushing up like this, pushing up, breaking structure, breaking structure. And for some reason, the market got here and started doing like this. Started doing like this. Started doing like this. Hey, this is one of key market structure you need to understand for you not to be making a bunch of mistakes. See now, as long as guys, you need to pay attention. You need to pay close attention to this particular point now. As long as because for me as a day trader, as a swing trader, this is my key zone here. This is my key zone here. Why? Because this zone is what led to the break of this structure here. Let me delete this guy so that this thing will be clean. So this zone is what led to this break of this structure here. So this one is what led to the break of this structure here. This one is what led to this structure here on the daily perspective. Okay, this one led to the break of this structure. This one led to the structure here. Now, until this particular guy here, let me remove all this one so that you will not be confused. Let me just remove all this one so that it will just remain only one. Or all this one are not necessary again. This is where I'll be keeping my eyes on until this particular guy, until market breaks this particular guy and close lower, close below it. That is where I cannot say the market, I cannot balance it to 50-50. Because sometimes it can also be a manipulation to just to click that and shoot up again. But I've seen that happen severally. What you want to be doing is that you just want to be like, for me, this is my zone that I'll keep my eyes on. If the market is not able to break below here, break below here and close, the market is still technically bullish. Remember, this is the overall zone which the market is targeting, which a lot of traders also are keeping their eyes on. But for some reason, those big guys, they don't want to carry a lot of liquidity to them. They want to drop some by taking their stop losses so that they cannot shoot this market back up here. So they cannot shoot it back up here. So that is what they do sometimes. So now, as a smart trader, you need to be patient and be sensitive enough to know that as long as we're still respecting this particular zone here, technically we are still bullish. But this particular form on 4 hours to here, and to this break rate, they have given you a total of 50 or 30. That is why I say you need to understand your trading pattern. Are you a swing trader or are you a day trader? It's a swing trader. Me, I would likely want to be avoiding this particular setup because I will be thinking that he's a fake out, or this is just to trap a lot of traders to start selling. So I personally don't want to take this particular trade. The day trader can easily take from here to here or from here to here. We give them around 30 to 20. Now I will be patient to see what this market will do, because I know for far that as long as this zone is still respected, the market is still technically bullish. So what it does most time is that once the market comes here, it just does as if it wants to near here. The next thing you will not see is it now shoot up. It will now shoot up to this. This is the particular zone where the market is eyeing. But the market don't want to carry a lot of liquidity up to here. It wants to drop some so that it will have now drop a lot some traders so that it now fuel this particular guy to the TP zone, to the major zone, which is where a lot of traders are targeting. So this is what you want to be keeping your eyes on. This thing may happen when it's happening in the middle of nowhere. Do not pay attention to it as a swing trader. But if you're a day trader or scalper, yeah, you can now take. Sometimes I do take a quick 20 pips if I'm scalping on my because I have two accounts. One is for swing, one is for just maybe 20, 30 pips, day trading or scalping. But my major account is swing. Now, maybe you can just take maybe a quick 30 pips down to here, something like that, to know that this market will be head up higher. Once you see this, definitely they will give you a lot of reaction once the market is not able to break below here and the market will shoot up. So this thing you can also apply it. It's still the same thing to the sell side. If you are selling, if the market is it's still the same thing. why I'm doing this, why I'm rushing is that I don't want this video to exceed maybe 20 something minutes because of a lot of people don't like watching lengthy videos. So this is the example. So now let me dive into the charts and show you the chart GBP card that I personally was keeping. I was trading it as of when it happened, and I saw this pattern, and when I saw this pattern, I laughed. I know that for a fact that this market is still heading higher. So you can see how I labeled it, how I circled it red. You can see how I circled it red. Now know that the market broke here, came back for retest, blew up from here, and started going up. I know that this is my zone that I've established for a very long time, which is for my monthly and my weekly. I know that this market wants to get here. But for some reason, this market wants to drop a lot of people halfway and do what we call stop loss run. And that is why this market kept on behaving like this, like behaving here for some period of time. So now what I did was, let's go over to 4 hours so that you're able to see clearly what I'm trying to explain to you. 4 hours, enter. Now let's just switch back and see where that thing occurred. You can see where it occurred. As of when I entered this trade, with the principle of Fibonacci. That was when I entered this trade. Then when I entered, the market was around somewhere here. I entered the trade, and the market was pulling up, and I know for a fact that the market is coming here. And this is the market. If you watch my previous video, you will hear me say that I used about two trades to pass my phase one as of last year. This was the pair I usually pick, and as of then the market was bullish, was moving up. For some reason, this market got here, and it gave me this M pattern, which is a reversal pattern that that I know, that a lot of traders also know as a reversal pattern. But what now differentiates me and other traders that will now close their trade is me understanding that we are not in a key zone. For this pattern to be valid, it has to be on a key zone. Note, it has to be on a daily key zone, on weekly key zone as of swing trader. So I know that this pattern is not valid. It's just a trick to trap a lot of traders to start selling so that the market can have a lot of money, a lot of liquidity to push up. So when this pattern happened, I showed some of my guys who is also trader around me. I told them that the guy was telling me, yeah, legend exit. I said, no, that this is a trap. I'm not going to exit my position. I will even add more position. I think I added one position somewhere around here. And after then, the market does this break and retest to just fool a lot of traders that the break and retest has occurred. Break and retest. And from there, the market now, as if it wants to bleed, from there it shoot up. When it shoot up, note, it was when the market finally got here. That was when I exited my position. That was when I said, okay, now the market now is at a key zone and I exit my position. So you guys should be able to understand this particular and know when a reversal wants to occur and when these big guys want to trap traders. To understand the market spot and chart pattern will play a major key role in your trading career. So this is it. And the market finally came back here to this minus and shoot up again. And finally, let's go back to daily. This is what I want to show you guys. And still remember that we are still keeping eyes on this particular trade. If you watch my previous video, I still talk about this particular GBP card. I said I will be keeping my eyes on this particular neck. And if this particular neck can break and retest, that I will be looking to short this guy. But for some reason now, this particular guy gets here. Remember, initially he got here, he shoot up, he got here, he shoot up, he got here, he shoot up. So I would not be so foolish to start selling the moment the market got here because the market has given me a change of trend over here. So I would not be so foolish. So I need a proper confirmation, meaning that this market must break below here, come back with a nice retest before I will be taking any move in the market. Let's go back to 4 hours and let me show you why I circled it. You can see that I just trapped this guy in between these two zones here, in between these two zones. I beg your pardon. That whatever this market will do here, it will give me another confirmation. If this market can come and break above here, retest successfully, then the market may temporarily buy, but continue in its overall direction. Not yet, but I'm just keeping my eyes on it to see what this guy can do. If this guy can do any of these two, fine. But for now, I'm still keeping my eyes on this guy, and I will not be I will not be shooting my shot yet until I see a lot of proper confirmation. Remember, we are still in uptrend, about a lot. We are temporarily in that, but I just hope that we will break here because we are on a major key zone on the weekly and monthly time frame. So I've been hopeful that this zone will be taken out and retest, then we cannot take a quick sell. My target for this sell is somewhere here. First TP will be around here. I did map it out. Will be around here. Will be around here. Second TP maybe probably somewhere here. Then I will be leaving this one as my last TP, and hopefully the market will play out, but I don't know yet. But until then, we don't force trade. We allow the market to give us. We'll be sitting on our hands until the market give us, tell us that, hey, I'm ready to head lower. Now come and join me. So that is what I have for you in this video. I hope this video will be helpful for you. As you all know, no one knows it all. I'm here to learn. You are here to learn until we attain the level which I call the CPT, consistent profitable trader. I'm not there yet, and I know a lot of traders also are not there yet, but we can still grow together by subscribing to my YouTube channel and giving me a like if you like my video, and also giving me a dislike if you don't also like it. But please tell me in the comment box below to do in my next video. As you all know, no one knows it all. I remain your boy, the Legend FS Academy. So until I come your way again, probably, I don't know, but until I come your way again, maybe before the end of the week, I will do another video. Until then, keep peeping, and please never give up. No matter the condition you see on chart, keep on trading. Never give up. Bye.